The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and this is the 11 o'clock hour. I'm here Monday through Friday, 877-927-6648. Love to take your calls. Let's just try this. We haven't done that for a while. Well, we won't be doing it now either. Just looking for the international number. Had it right in front of me. Seems to have disappeared. So that's that. Well, call us here at TFNN. Love to take your calls. Dow's up 91 at 50,098. Finally, we're getting that bounce that should have happened yesterday. It happened intraday. It didn't happen throughout the day because the Dow closed down 40-something points. The S&P is at 1793, up 1143. I'd like to do the Qs for a moment because Apple is very much part of that, and Apple's dragging them down, and the Qs right now are at the high of the day. This is very interesting because they did not break below yesterday's low, even though the candle made yesterday suggested that if they got halfway into it, they would test the lows of 82.25 instead of the 85.25. Instead of the low today is 85.35, 10 cents higher. And going into the close of yesterday, and we're down to 7 cents at 85.83. Not bad action considering Apple is down 39 points at 510. And more important, what I can see is in the 120-minute chart, the low of 85.68 that was made on the 13th got broken yesterday, and we've retested it. Now we've made the H pattern that says, yes, you could get a bit of a bounce. 86.50 would be very strong resistance. But most importantly, what I'm looking at here is that cluster formation that occurred at the top in the weekly chart, which has a peak G/E, is still saying that particular pattern with a rising wedge should have a cup formation. Doesn't have to be very deep, but a cup formation. That cup formation could come down to the 84. Let me just see here. To the 84.05 low of the 20th, the week of the 20th of December, maybe even a little bit lower than that. Could take a little bit of time, but we'll be watching this real closely because it's just 1 week that we've. I'm suspecting that we aren't going to make a new recovery high of round number 89. It was made on the 24th of January this week, and that means that we will get a peak. We're going to be watching this closely. Moving on, we're going to look at, let me just get to this here, 1 second. I'd also like to look at the GLD. The GLD is coming down. Now, I have divergence here because the GLD has made a peak C in the Chapman wave. Just a small, nominal move from the 114 area, 114.46 in the most recent low, which is lower than the low of the week of the 28th of June of 114.68. And so far, it's kind of a pathetic little rally that's only gone to 122.50. I'm saying pathetic. Even leg A last time went from 114.68 to 130.14. So yeah, it is kind of pathetic. And I've been talking about the H pattern going to an M pattern based on the Chapman wave methodology, and the weekly chart still looks terrible. I'm still expecting that there's some residual strength in gold, that it could still bounce a little higher. We're looking at a peak D in the gold contract itself, and the GDX is in leg C. E made a peak E, and the GDXJ, that's junior gold miners, GDXJ, has also made a peak E, yes, and is pulling back underneath the 9-period exponential moving average, digesting the recent big gains. We've got crude oil I haven't updated this for a little while. Crude oil trading right now at 97.60, having made a peak D recently and about to try to retest that. Nice action in crude oil, actually. Let me just check the USA. That is, in fact, the United States Oil Fund. Oh, USO, not USA. USA looks not very good. USO is trading at 34.76, and there's a real good chance that if it takes out 34.92 to start leg D, that was the high of the 23rd of January, that we will test 35.12, the 200 period exponential moving average. One other thing that I'm looking at here is the dollar had a nice rally. A bounce that got repelled at the 9-period exponential moving average. It's just in a sideways trading range. And the EUR-USD holding the 9-period exponential moving average as support. So far, there's no real great strength in that. What's interesting is that the USD-JPY, the currency pair, just like the dollar, tried to bounce. It didn't even make the 9-period exponential moving average. Let me just sum up, just to have a XLE, question of the Dan. Yeah, XLE was a short, made peak F in the daily at 88.54. That was a peak F in the weekly, and a leg F, which could be very well be by Friday, absolutely will be by Friday, a peak. And I don't know if it's going to recycle, so that this is really F/B. I just thought I'd keep the Fs because the 9-period moving average at 83.30 is going to be important. A close below 83 in the monthly chart says, okay, be careful. There could be a deeper pullback. What am I missing here? I don't think I'm missing. Yeah, copper. At HG, copper is trading. It was trading down again. Yeah, trading down again. It's not acting very well. And it looks like it's gone to the top of the range. Might be wanting to go to the bottom of the range. I'm still in the camp that says that we have got a 4 to 6 week consolidation going on. We've already had since December the 31st. That's 4 weeks. So there could be about another 4 weeks or so of consolidation. It might be less. It depends on the deepness of any retracement. In other words, the Dow has had a nice move. It hasn't gone above 16,000. If that 15,990 is a very strong repellent area, starts to turn down and we go underneath 15,900 again, that would say to me that we're going to be retesting the recent lows. The action in the volatility index down $1.50 at 1592. That's quite steep, actually. But you've got to expect that this is, I call it buying pressure and selling pressure, and these things work very quickly. This could turn into an E in the daily and not a B, and that would say that the VIX has gone below $15, below the 1492 support, and has to restart the whole thing process again. If for whatever reason by Friday there's a sudden move up and the VIX closes anywhere above 18, let alone the recent high of 1899, that's going to say, uh-oh, that's a confirmation that we've begun to see higher highs and higher lows in the VIX, and lower lows and lower highs in the general market itself, especially the Dow. Question about N-gas right there. Oh, N-gas. NGAS. That used to be a stock. It was taken over maybe. So maybe we're looking at a natural gas, NG. Big spike up. I'm calling this a leg B. It's a little complicated. It could be an instant restart. Give me a moment. I'll try, when we get to the break, I'll try to do a little work on the natural gas contract, because it is a leg D in the weekly. That's where you can expect, and the monthly, you can expect some kind of a retracement. So let me do a little work as if it's a flat base restart. Chapman wave flat base restart implies some other things. I don't want to do this very quickly because it's quite important to a lot of you, but I am going to go to Joe in Boston. Joe, how are you?
Good, Basil. How you doing?
Very well, thank you.
You sound great. For what you went through, I'm glad you're recovering and in better health.
Well, I do appreciate that, and I must say I really am feeling a lot better, and I must say that it is it was very serious stuff, right. But at the same time, just modern. I know a lot of people rail against pharmaceutical companies and medical institutions in general.
Right.
I happen to love them. I think they've saved my life on many occasions, so I'm a happy camper.
Well, I hope you have many more than 9 lives. How's that?
At this particular rate, I'm beginning to think that I have kind of run out of those 9, and I need to double that. So thank you. Thank you very much. I'll take whatever I can get.
I wanted to look at PANW. I don't have a position, but I'm just watching this as it pulls back, and I think this once the market's done correcting, this might be one of the new leaders.
This is such an interesting stock. I did a lot of work on this, and I'm not going to rail against my... I must have some kind of a bug in my TradeStation platform, because obviously Palo Alto Networks I've done many times before. I look at this and it's a blank chart. But it's only in leg B in the monthly chart since the IPO. Folks, we're looking at PANW. It's trading at 61.46. This is Palo Alto Networks Inc. Out of all, whatever they do, out of all the high-tech companies, the recent high-tech companies, this is one of those that seems to have had a very robust and energetic bunch of buyers that just keep coming in over and over. Even the recent pullback held the 9-period moving average in the weekly, and a nice candles forming in the weekly, but it actually needs to go quite a bit higher. It needs to break above 63.09 to say that this will be a leg C going above the 64.92. Now, the stochastic and MACD in the weekly chart are really good. The daily chart had a very strong pullback, and I just want to do this again because this is such an unusual chart. I've got a peak C where I normally would not get a peak C. That is the low, 40.49, and then goes to 40.36 on the 13th of November. Then we merely count A to B. Yep, there's nothing else there. That's C. That's D, clear as anything. Now, the big question is that E, or is that an alternate count, not instant restart, but what I call a flat-based restart? So that would be A. That would go underneath, but not break D. I don't like to mess around. All I'm going to say, it's a little unusual. It gave a peak. I've got it at peak C at 64.92 on the 17th. There is another way to count it, but then I start to make it fuzzy. I don't like fuzzy. Now, fuzzy would say that would be an alternate count D, and that would be fine. I'd be a happy camper, and I say, now we're pulling back in the daily chart. Nice action, and it's very simple. Do you have a position at all?
No. I was looking at that 57 area.
Okay. Now, I do hear the break.
Support.
I know what I want to do with this. Give me a second. We've got the break coming up. I need not just to do the 120-minute chart. There's some other technique that I want to use on this, because I want to see how vulnerable it would be if it took out 56, 54 on a retracement. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. We're back with Joe in Boston. Dow's now up 61. S&P's up 734. So just while I'm speaking with Joe, I just wanted to mention this because I got to do these things as I think of them. Otherwise, it just goes in and out of my mind and it's gone. So I need to just mention once again, in a bear phase, and I think we've begun a bear phase, we will know it's a bear phase if rallies fail. Intraday rallies, just like we saw on the way up in December, every single excuse to move higher intraday, no matter how low we were down, by the end of the day we were up. Now we should be seeing the opposite. Every excuse to sell off, that would tell us that we've changed course. The direction has changed. I believe the daily has already told us that in sell mode. I haven't got a sell mode yet. I've got a sell signal in the weekly charts. Now we'll see what's going to happen Friday. Now, I wanted to mention that. Why? Because this stock, having to look, Palo Alto Networks, Inc., made a high of 64.92 on the 17th of January. Its all-time high after the IPO back in July of 2012. Its all-time high was in September of 2012 at 72.61. Not that far off, but far enough right now. Why? Because it's about 2/3 of the way from the low, which is at 39.08 back in June of 2013. Reason why I looked at this chart and I wanted to look at it very carefully is, yes, the 120-minute chart has done everything we wanted to see. It's got a little doji bottom at the low of the second 22nd of January at 54.70, it goes peak A. Folks, in the Chapman methodology, it's a very simple system. Look for the most identifiable lowest low bar to the left, and then you can start your wave count. The wave count should take you to at least 4 higher peaks. The low bar that is made cannot also be the high bar, except when you get to a peak D, the 4th highest peak. So if there was a low bar like this one here after it made peak F, the 10th of January at 3:30 in the afternoon, and then it pulled back, that bar could not also be A. You have to wait because you don't know it's the low bar until the following bar, which has a higher low bar. And I say low bar because it's the entire bar. So that starts the new wave count, and that goes to A, B, C. It makes a D, long-legged doji, which always likes to be retested, which it was the same day. And on the 17th at 64.92, then it goes trough A on the way down, the lowercase letters, A, trough B, trough C, trough D, just below the 200 period, which was the springboard for all the moves before, even the retest on the 13th of January, that very ugly 180-point down day. And then what happens is it pops up at, that's today, 27th, it opens down, makes a nice candle, tests the 200 period moving average, propels right through the 9-period moving average, and is trading right at the high at 61.50. Joe, I want you to spend a little time on that just to say that I wanted to see if there was a market pullback sometime intraday. Now we've already got one. Quite a I wouldn't say it's a very deep one, but the futures going from 1788 to 1781 says, yeah, it's quite a bit of a pullback there. Now what I'm looking at is that Palo Alto is acting very well. The daily chart, day is not even 2 hours old yet, but it is above the 9-period moving average, and I've drawn a little circle. I don't know if you can see it on the chart. Folks, if you are listening, don't forget, you can go to see the charts, all the charts that we do here at TFNN. Right there, you go to the front page of TFNN, hit that icon there with the three icons of cell phones, and it'll pick up one of your instruments. It'll pick it up and give you a live feed, and here it is. Now, I don't care whether this is a C or whether it's a G at the top. I do care that the candle that was formed yesterday and the candle that's forming today is good, but the MACD is still very poor, and the stochastic hasn't even turned up yet. So that says they're either very late, and when they finally turn and the stochastic goes from 51 to over 80%, this thing's flying at all-time highs, or it's saying we're within 2 bars in the 120-minute chart, or maybe 1 bar of the daily going into tomorrow, Wednesday, of making a reversal to the downside. So how do you play this? Now, I know that you're not afraid to look at options, right?
Right.
And I'm going to suggest to you that a very inexpensive way of looking at this is to look at it's at 61.59. I don't know what strike prices they have for the options, but if this is really only leg B, and the candle thus far, not even halfway into the week, but at least the start of the week, is still pretty good, there's a chance that using an option very inexpensively, you could get yourself a very nice kickoff from the 61.56 area to maybe a strike price of 62 or 63. So I don't have anybody on the phone right now. I like the stock. I'd like to spend a little moment doing a little bit more work on it because I think it's worth it. So I'll be joking you hold.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, is going up in price again at the end of this month. Andy's weekly newsletter has delivered multiple profitable trades for his subscribers, even including a triple-digit winner within recent months. Right now is a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy will also be hosting a subscriber event on Thursday, January 30th, Seasonality in Energy and Agricultural Commodities, that you can gain access to by simply signing up for a free trial to Andy Hecht's newsletter, the Technomental Commodity Report. A 30-day free trial to the Technomental Commodity Report, a free 60-minute live online webinar with Andy Hecht, which will be archived, and you lock in the low price of $49 a month should you decide to continue after your 30-day free trial. Offers don't get much better than this. Act now before January is over and this offer passes you by. Sign up for your 30-day free trial to the Technomental Commodity Report today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, we're back. Now I just wanted to show this chart. This left one here always for me is the daily chart, the middle is the weekly, and to the right here is the monthly chart. When I grab this one here, it's usually the 120-minute chart. You can see that Palo Alto, I should remember that. I always thought Palo Alto was just such a beautiful, I don't know what it's called. The city is, it's not a really, it's a town, right? It's a college. It's that's where all the high techs are, and I remember it being really pretty there. Anyway, Palo Alto networks, and it is trading in the 120-minute chart right now outside the resistance line. That's usually a very big positive. The MACD is finally turned up, and the stochastic is turned up, and it's only at 48%, but it's still very nice. Near San Francisco. And the daily chart is what I wanted to show you. Normally what I would have said, if it stalled anywhere from here at 61.48, if it closes under 61 today, then I'd be saying to you, be careful, because it could go sideways, and then what you would get is a head and shoulders. This is truly like a head and shoulders, with the entire shoulder being the December move that only broke out in January the 13th to that spike, which is the head, and now you'd be having the right shoulder, and then that should fail. And if it does fail, you'd be looking at a move that took out 56.96 and then very quickly started to take out 54.70. This, on the other hand, says, At this particular point, I don't want to go that way. I'm stalling because I've still got internal strength in price, but the technicals in the daily are fading, the weekly are very strong. So that's the reason why I thought if you're looking, I should have taken the break to look at some options, and I didn't do that. But anyway, that would be easy enough. If you're looking at an option situation, this is January, so you'd go into February. That would be perfect because if it's going to work within 3 to 7 sessions, it should be at or over the resistance of 64.92. And playing it with an option means that, yes, you have a time constraint, but that's exactly what you want right now because it needs to show that it's got follow-through strength. But if you were to go long, here's the other scenario. You can go long a small portion right here at 61.48 because you would know that if it started to slide, all it has to do is start to close. Look like the 120-minute is going to close below the daily 9-period moving average of 61.04, and that would say, hey, be careful. Could make another H pattern. I don't want anything more than maybe even a 60-cent stop, and that would be it. The reason why I'm saying I'm looking at the upside right now is because that in this particular market environment, fund managers will be looking for the very best that have held the very best. Why? Because very often, there's no guarantee, but these are the ones that don't just spring back quickly. They come powering back. Now, I'm just looking at my list of the 50 IBD stocks. I don't know if I have a chance to do that, if it's going to work for me quick enough. I don't see it here on the list. Maybe it's there. I just didn't see it. But it is one of those stocks that at some point will start to make the IBD top 50. And if it does that, that's going to be a great benefit to it. So that's my thinking. You don't have to get carried away, but to be in the stock as it breaks out, going from 61 into the 65, 66 area, that's really nice to do. To do it with an option means you've now limited your time, but I think that would be the most that you would get right now is perhaps a leg D, and then it will digest. That would turn out to be a leg C in the weekly, which would be very positive. That's the reason why I'm saying to be in the stock right now, besides being fun, could be very nice with a 50-cent stop, with a at least a 3.25, 3.5 point upside potential if we are looking at a new recovery high. I mean, that's the way that I would trade it. I wouldn't play it. I'd play it with an option. And by playing it, I mean you've now got limited time. You could give yourself limited, risk, and yet you'd be participating very nicely if it took off. I'm just very suspicious of this market. I've got a sell mode in the daily, sell signal in the weekly charts. I think that we're in for a tough February. So I don't know how you want to go through it, but I'm looking at it with a bias right now that says all it needs is about another 60 cents, 70 cents to the upside, and that'll be very nice action. So I hope that gives you some sense of what I'm looking at. So, okay, Joe, and I suspect that Joe just had to take off a few minutes ago, but I'm sure he's listening to what we're discussing. So thank you for calling, Joe. Always appreciate. Are you there? Hi, Joe. Joe, are you there? I've got the echo, and I've got Joe, and I've got my engineer typing. Oh, you must have just dropped. Maybe it's your cell phone or something like that. Sorry, Joe, but that's my analysis. Good eye. You've always really got a good eye for these particular stocks, and I love the weekly chart. This has been on my list, but then I forgot where I put it. I'm putting it right back on my list. I hope I have the patience for it, because that's how it's going to be. Now, talking about patience, there is a stock that I wanted to buy this morning, and I wanted it only if it had a very sharp drop. And lo and behold, we got that stock, and now it is up from our entry price, and this is exactly the market. That's why I wanted to look at the stock for Joe, because this is exactly the market where if you keep your eye on certain things and you have patience, You don't know if it's going to work out, but you want the best possible scenario. And that scenario said that this particular stock, I wanted a small position. I didn't want to go too long because this is actually one of the stocks, a recovery stock, a long time period that I'm looking at here, potential. And if it works, then what we're doing is we're getting it so close to the most recent low that any subscribers should say to themselves, hey, the risk here is worth it, because if we get it at the right price and it does start to do what we're anticipating, it was the best opportunity. And I think we took the best opportunity. I don't know if it'll work, but so far it is up quite nicely in percentage terms from where we got it. The day has hardly begun, so I don't even know what the close will be. But this is the kind of thing, that's the reason why I want to take time, because if Palo Alto Networks is going to work for Joe, this is the perfect time. Right here, you've got an opportunity to pull back from the highs. It's doing something now that a 120-minute chart is saying, yeah, I'm moving in the right direction. It's still very early in the day, but that was a good opportunity. So good eye. Now, let me just do one other thing that I wanted to spend some time on. I wanted to go back to the VIX, and I've been spending, for years now, I've been spending a lot of time on the VIX, trying to make it as simple to read as possible. Spent some time yesterday with someone. We were looking at the volatility index historically. And I said, hey, Bob, look at this. You see the cup formations that are formed? You see that it gets a little smaller, and you see that this cup formation here had a little, this is the volatility index weekly, and it had, very often you get within the cup formation, you get a couple of little mini cups. Well, those mini cups invariably come from the low, and then after that it moves to the right side of the cup, and it doesn't make a new low after that. Except it didn't happen this time. It went 11.83 as a low back, 11.83 back in the week of the 9th of August, and then it went to peak A and then B minus below the 2191 peak D that was made back in the weekly chart of the 28th of June in the VIX, the volatility index. And now what we're looking at is from the low of 11.65, it started a brand new move to the upside. This is a little different. It also turns out that it's a leg B, but there is a difference because it's challenging the declining trend line, and it's getting to be in a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 in a slightly shorter time period. So that's why I say that this Friday at 4 o'clock, we've got to be looking very closely at where the volatility index, if it fails, if the volatility index is below, I'd say 15.30, in the very low 15 area, maybe even 14s, then what we've got is, and then I have to say, you know what, that might be it, the 3%, 3, 4, 5%, depends which index you're looking at, a pullback that we had in the market was it. I don't believe that. I don't believe that for a minute. I think that we are making accelerated moves here in the volatility index. And I think that at some point very soon we will break 2134. That was the high of the week of the 11th of October. And immediately 2191 will be in focus because that was the high, the higher high of 28th of June. So those are my parameters. Under 1530, we can just be in a sideways move. Most of the move has been done on the downside, and you're going to see some very nice action in many of the indexes. Maybe the Dow will be a bit of a laggard. That's what I'm looking at. Monthly chart, we've got until Friday, and I don't even want to speculate on the monthly chart because at this particular point it's not giving any signals whatsoever. Okay, so I had a question in the den about SRC. Yes, I hope I've done that one. I think I have. No, I haven't. So SRC is, I don't even want to do it here at 9. This is leg A, B, C. There could be there could be a parallel high there, phantom peak. I'm just going to keep it as strict as possible. IPO comes out in the tens. It drops down to the 830s, and it's trading right now in leg C. Could be peak C, but right now I'm calling it leg C in the weekly chart, leg B in the monthly chart. I'll tell you what it is in a minute. Spirit Realty, acting one of our dentists who has an amazing eye for these investors, business daily type stocks, the ones that get talked up and recommended, waits for the pullback, and then starts to use the Chapman wave methodology. Okay, so that's going to be an A to a B, to a C, to a D, to an E, and then it pulls back, but it hasn't broken down. Oh, good eye. So SRC trading at $10.53. It's called Spirit Realty Capital Inc. Up 5 cents at 10.553, holding the 9-period moving average. If you're in it, I'm going to say great, hold it. I'd be a little careful if it breaks $10.37. 1037 is the low of the 17th, but I say if it breaks 1030, you've got to be careful because it's going to then tackle the double bottom of those two bars, 1016 low, 1016 low of the 13th and 14th of January. That's number one. Number two, the weekly is saying, I've rallied very strongly to a peak A and then to a peak B. Peak C is not as strong as the others yet. It's not finished, but it isn't yet as strong. So be a little careful because 10.20 to 10.09 is the very strong support that has to hold. So all I'm going to say is if you're in it, great. If you're not in it, I would not recommend you buying it right here. I do have to give it a little time. I'd be upset because at 1067 it's starting to get away to the upside. You've lost your cushion. But if you want to nibble, if it breaks above 1080, that's going to be very positive. And on the downside, as I say, 1042 to 1037, very important support. I just put it on the watch list for now. Dick's Sports Goods, DKS, I drove by it recently, and I said to myself, how are they still doing so well? And then I looked at the chart. I got this chart notated at some point. But of course, it's not notated anymore. Really have to get to the bottom of this, just wasting time. A, B, C, D. What is that? E, F? Yeah, E and F based on the MACD. E, F, A, B, C, D. I think that's E. Is that E and F? Oh, EF is back in leg F. The last F was a very serious pullback. The most serious is it's had, in fact. And that was back in July. I'll tell you right now. Dick's Sporting Goods trading at 51.74, down 11 cents. It made a peak F top. It went from the low of of November of 2008 at 721. Went to a peak F, 6 peaks high at 40.97. Pulls back for 1 to 3, 4 months. Starts a brand new buy mode. Goes to 40.97, pulls back to 27.10. That's a big pullback. And then it goes peak A, B, C, D, right there, E, and now it's gone to a very quick E and F. It had a fairly quick E and F before. Got to be careful. The high of 58.87 with a round number open. I can't believe it. A monthly chart with a round number high open of 58, and it goes to a high of 59. No, 58.87, 87 cents higher, pulling back. I would not be looking at this as a long. The monthly chart has said possible hat trick top here. The weekly chart, I don't want to do it quickly. I'll do it during the break. I'll be right back with Alex in New York as well, looking at IBB.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman. Just Dick's, I would say I would not be buying this. I think I'm about to get a peak F hat-trick top in the monthly chart. If there's a lower high bar in February, that's number 1. Number 2, it's got a peak D in the weekly, and it's pulled back very sharply. If it cracks this 50.31 support from October, the week the 25th of October, it's a real trouble. That's an Eiffel Tower straight up, straight down chart, and it's already done that in the daily. It's below the 200-period moving average. My suspicion is that it is going to test a 50.31 low of the 24th of October, and that could be sooner rather than later. I'd be shorting this on a bounce. It's at 51.77, somewhere in the 50, if it can do that, between 53 and 54. Is that what I wrote? 52 to 53. 52 to 53 with a 54.50 stop, somewhere around there. Let's go to Alex in New York. Hi, Alex. How are you?
Okay, Basil. I was just wondering, you mentioned a price in the IDB that you thought it could bounce back to, and I think it exceeded that price today.
By a fraction, yes. 243.94 was the level I was looking at. That's the 9-period moving average, and it went to 244.66. It's trading at 242.46 right now.
Does that change your opinion that it exceeded that price?
No. I like to look at these. I like to look at these levels and see how often they actually work. And I don't know if it's going to work because this is just the first 2.5 hours of the trading day. But so far it has worked. But most importantly, it's telling me that that is a line in the sand that it is respecting. That's number one. And number two is the pattern that I drew. Let me just do this again. It's a little, there we are. The pattern in the 120-minute chart where it held the support exactly in the trend line of 234.28 and 234.15. So it tells me that it's behaving like it should. But believe me, this is the area that all the money managers that have been in any of the biotech stocks at any point over the last 2-3 years are going to gravitate towards thinking, oh boy, if I miss another opportunity to add to whatever it is, this is it. So I did expect that bounce. Most importantly, what I would say to you is that if it closed above 245.10, then I'd have to say to myself, be careful, because it could do one of those things that it's done before when it drops very sharply. Folks, we're looking at the IBB iShares NASDAQ Biotechnology ETF, which once again we are short. We're both short this, and we are long, the 200% long in ETF. So I'm just watching it real closely. I just don't think, even though I've got a peak C and I can't give it any other count, I don't think it's going to go to a D in this particular phase. I just don't see it. I looked at too many of them. So if it does break above 245? Yeah, 245.10. Then perhaps it's going to go a little higher. But this is the area that I'm expecting that I'll even draw it in, because that's the pattern I am anticipating, some kind of an H pattern. Now, I need to emphasize that it must close above the 25.10 area. And then I'm going to have to say, oh, don't tell me it's going to do that again by stopping me out, taking away fantastic gains. But everything about it, the weekly, everything about it is saying to me it's getting really toppy. This is the opportunity that if it's going to go down, this is the moment that it should do that. If I'm wrong, I'm wrong, but that's my thinking.
Okay. I didn't get stopped out of it. It didn't reach my sell point on a short-term trade I have in it.
Okay, yeah, because I've got to stop much, much higher up. But this is the area that it could bounce, and it's doing that. So let's watch it real closely together, Alex. My suspicion is it is going to be going down. Whether we're still in it or not, I don't know. I suspect it's going to give us a chance. We'll see. We did take half our profits yesterday on the trade, so that was a very good one of the trades. So I'll be back tomorrow, folks. Stay tuned for the Options Hour, and thank you for calling, Alex.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.